Hello and welcome to today's more important analysis videos with me, Rich Perry, market analyst at Hantec Markets on Thursday, 24th of May. We've got a sort of a risk neutral aspect to these markets at the moment, because what we have seen overnight is the announcement that the US Trade Commerce Department were going to be investigating into automobile imports, and basically that sort of goes again along the lines of trade protectionism and the fears that they may be sort of restricting imports and putting on tariffs and etc. etc. So subsequently the markets took that as a bit of a negative, but we had a fairly dovish set of Fed meeting minutes overnight as well, and that sort of has helped to balance off sentiment a little bit. I mean, for example, if you take the S&P 500, for example, was lower yesterday on this increased sort of risk aversion that the market has been seeing, but then subsequently the dovish Fed meeting minutes helped to sort of see that move rally back again. And what we have seen is equity markets sort of stabilised to an extent in the European session today. But it's interesting that we have got the dollar under pressure, and that has been driven by that dovish set of Fed meeting minutes. The Fed sort of clarified a little bit more as to what it meant by symmetrical in terms of the inflation target, and allowing inflation to run hot above 2%, and that suggests that they're going to allow that to happen, and sort of leans back a little bit on the more aggressive monetary policy that had been beginning to take hold, and sort of just alleviate some of the pressure I think that the market will see through further rate hikes, and just has pulled the dollar slightly back lower. Now we have seen the treasury yields dropping quite sharply, although it's stabilised to an extent as this morning has gone on. We're actually bang on pretty much 3% once again, but the 10-year treasury yield back below 3% this morning and yesterday. So that has sort of played into that corrective dollar move that we had seen. And yeah, it's just sort of affected across the majors really, with the dollar underperforming euro and sterling. Japanese yen is a key factor as well. Yield differentials being pulled around. The dollar being pulled around by real differentials, certainly on the on dollar yen, whereby we had quite a strong drop on that yield differential. Subsequently, dollar yen dropping away, and what we have got is a bit of a focus on sterling this morning, as retail sales for the UK are announced. Not a great deal of data to really sort of point towards. You've got the retail sales for the UK, which is expected to actually fall almost back towards flat. We have had in the UK, we've had a struggle in the first quarter, and that seems as though that the data that we're going to get in April is not going to help that struggle. So subsequently, we're seeing the year-on-year ex-fuel retail sales actually fall back to 0.1% for the year, so not great there. Into the afternoon, we've got existing home sales for the US. Just before that, weekly jobless claims basically flat to 220,000. Existing home sales expected to just come back slightly to 5.57 million. Yeah, so a little bit of dollar data this afternoon, but not a great deal there. That takes me on to my chart of the day, which is the French CAC 40. Now, the French CAC has been trending higher, as have all these indices in the last sort of 6-8 weeks, really. Really strong uptrend channel, but we had that big, strong bear candle yesterday. Strongest down day that we've seen since late March on the CAC, and subsequently we've seen that uptrend channel broken. The latest breakout, 5,567, has been breached as a support also. So that old breakout would be a basis of support, but that's got broken to the downside. Not only that, you're looking at these momentum indicators, stochastics, crossover bear crossover sell signal seemingly going to be confirmed today. That one in February certainly saw the markets entering back into a bear phase, and look at that one in January as well. The confirmed crossover sell signal on the stochastics back in January certainly signaled the really sharp sell-off that we saw in February. So is this a negative signal that we could be sort of following? While the MACD lines are also crossing lower, the RSI giving a crossover back below 70. So all these all these momentum indicators giving these signals at the same time. Little bit of a bounce back today, although it'll be interesting to see how that continues, because you've got more of a corrective outlook now on the MACD lines, especially. Look at those MACD lines throughout the rally higher. MACD never got below neutral, although yesterday quite considerably below neutral. So we've had a little bit of a rebound today, but how the market responds to this rebound will now be interesting. You've got a little bit of overhead supply in terms of on the intraday chart, 5604, bit of a pivot there. So a failure underneath 5604, which again also is around about where that rising 55-hour moving average is, and that was sort of flanking the support higher. So this is a rebound that will be interesting to watch. I think if it fails and starts to sort of come back again, you've got the 5539 breakout sort of pivot as well on the hourly chart, but that support yesterday 5544. So there is a basis of support around that sort of 5540 area. But again, if that breaks to the downside, I think that could start to induce a bit of a corrective phase, and that would be what we'd be looking out for. But certainly the momentum indicators are suggesting that could well be happening. So with that in mind, wish you good luck in your trading, and I'll speak to you later.